Village channel. Today we will see the market forecast for the next 1 week and the weekly expiry for Nifty and Bank Nifty. So before we go into the detailed analysis for Bank Nifty and Nifty, we will see the positives and negatives for this week. So the active COVID cases in India has gone down less than 60,000, and if we see the number of active cases in worldometers for India, the active cases is less than 59,000. This is a significant drop in the number of active cases for India, and this is one of the positives. Are attractive at current levels. Nifty price to earnings ratio is less than 22. If we see the Nifty price to earnings ratio when compared with last year October November, which was hovering around 27.29 or 25.24, it has got reduced to levels of 21.21. so this is a level which was not seen since March, April, May of 2020. So now the price to earnings ratio is very less, and this is making the valuations very attractive for India in the short term. Markets have corrected significantly in the last 1 week, and this can attract long-term investors who are waiting on the sidelines to deploy their money. Going to the negatives, FIIs are continuously selling and they've sold more than 7,000 crores on last Friday. Crude oil prices have shot up above $113 per barrel. There is a significant global economic impact due to the Russian war and Ukraine-Russian war and the sanctions imposed on Russia. So this is going to make imports costlier for India, and rupee is likely to depreciate due to the Fed interest rate hike. The expected hike is 0.25% on 16th of March 2022. Coming to the technicals on Nifty, we see Nifty to go down further and take support at around 15,900 levels. So this is where we have seen a significant consolidation from June 2021 till beginning of August 2021. So there could be a significant demand in this zone of 15,400 to 15,900. Considering the current global cues, the chances of upside is very limited, and even if there is an upside, it is very difficult to go beyond 16,800 levels in Nifty. Coming to Bank Nifty is trading in a falling wedge pattern, and if we see, Bank Nifty has taken support at around 34,000 levels, which was the previous low of 34,000 levels was hit on sometime during December 2021, and there was a sharp bounce back from this level, and there was an intraday movement of 1,000 points plus after hitting around 34,000 levels in Bank Nifty, and then the recovery could not be sustained due to global cues and the current Ukraine-Russia war, and Bank Nifty lost more than 500 points from the intraday recovery and closed at 34,407, and we expect further declines in Bank Nifty as per this falling wedge pattern, and if 34,000 is broken on the downside for Bank Nifty, then the next support is somewhere around 33,400 levels, and if that support is also broken, then we might see levels of around 32,000. we will see a simple option strategy for Bank Nifty for the week expiring on 10th of March 2022. Due to the ongoing Ukraine-Russia conflict, we do not expect Bank Nifty to go beyond 37,400 levels. The premiums are less, but still we can make little bit of money by taking this trade of selling 37,400 call option and collecting a premium of 20 rupees, and to hedge this position to buy a call option at 38,500. The probability of profit for this trade is 95.63%. The max profit is 1.22%. There is a significant loss of 98.36% in case if Bank Nifty goes above 37,413. The net credit will be 337 rupees and the estimated margin will be 27,000. This is a high risk trade. We have taken this trade, and we are quoting this as a disclaimer. We have taken this trade on last Friday, and the probability of profit is more than 95%. And considering the current global markets and high oil prices, we do not expect Bank Nifty to go beyond 37,400 levels for the week expiring 10th March 2022. We have not deployed more than 10% of our capital, since this is a high risk trade and the max loss can be up till 98% of the capital. So this trade, even though the probability of profit is 95.63%, we should also give a considerable weightage for what would be the max loss in case if markets move violently above. So considering the global scenario, we have taken this trade with a view markets may not go beyond 37,400 in Bank Nifty. We will see a simple option strategy to make money in both Nifty and Bank Nifty in the next week. For Nifty, we do not expect Nifty to go beyond 17,000 unless we have this Russian-Ukraine war going to a complete ceasefire, and the probability of that happening in the current context is very low. So we intend to take a sell of 17,000 call option in Nifty, and we collect a premium of 23.9 rupees into 50 per lot. To hedge this position, we would buy a call option at 17,400 by paying a premium of 5.1 rupees, and the maximum profit out of this trade will be 2.81%. The probability of profit is more than 88%. The max loss is 57%. We would need an estimated margin of 33,000 and the net credit will be 940 rupees. This is a high risk trade, and disclaimer, we have taken this position on last Friday, and this is not a trading recommendation. This is one of the high probability strategy which can be taken to make a minor profit. There is a significant chance of loss of up to 57%, and hence we have not deployed more than 10% of our capital in this trade. If you want to take any trade, please consult your financial advisor before taking any trading decision. If you like this video and if this video is of information to you, please do like, share and subscribe. Thank you.